The honest company reported earnings on Friday. Today is Saturday, so let's do another video about it. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated to microcap stocks, which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com as a free resource to make you a more educated investor. So the company maintains full year 2000 and blah 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 outlook in the face of significant macro headwinds. I'm pleased to be able to maintain our financial outlook for the year, consistent with expectations. While inflation and supply chain pressures continue to challenge honest and the industry, we remain deeply focused on what we can control, driving innovation, maintaining cost discipline, investing in digital capabilities, expanding our distribution network, and executing our pricing strategy to position Honest for long-term growth. So revenues decreased 15%. In the first quarter of last year, they were 81 million, and now they are 67 million. And pretty much the diapers and wipes decreased, skin and personal care decreased, household and wellness decreased, so everything went down. The mix of digital last year was 52% to 48 retail, and of course more people are shopping retail, so retail is becoming a little bit more significant. I always go, the most important thing is the gross margin, because that's the beginning. So gross margin in the first quarter of 2022 was 30%, and last year it was 35%. If you watch my previous video, I talked about Procter & Gamble, which is the competitor. They have 50% profit margin, right? So 35% profit margin is not that great, and 30, it's not that great either. It's even worse, and that becomes problematic, especially when operating expenses were up 3 million the first quarter compared to the last quarter, and then they had a loss of 15 million this quarter versus a loss of 4 million the year prior, and adjusted EBITDA was negative 10 million. They ended the quarter with 78 million in cash, which declined by 15 million. This is an interesting situation, because when you are investing in growth companies or companies that don't yet have profitability, you do so because you think that the growth, eventually they're going to scale the business and eventually it's going to be profitable, because the business has to be profitable eventually. And honest company revenues are now decreasing, right? This is a big deal. Wall Street doesn't like decreasing revenues. They're going to slam your stock price, and they are slamming the stock price. But now what's more problematic is that I don't know if this company will be able to achieve the profitability, because think about this. They are making a product, honest product, better ingredients. Let's call it organic, right? Like organic food, organic products. Organic is more expensive to produce, okay? And then on top of it, we have inflation. So their costs, they are getting squeezed on their costs, like tremendously. And then at the same time, they're selling wholesale to Target, whatever retailers, whatever big box they're selling, and yeah, of course they're selling online too, but they're selling it to the retailers. Now, do you think the retailers are going to go to them and say, you know what, you guys are so honest, and we want to help your business, we want to help your margins, we're going to pay you extra for your products because we're just nice guys? No, the retail stores, they also realize that there's inflation, but they don't want to increase prices on consumers. They want to keep the prices as low as possible. So they are squeezing Honest on what they're willing to pay for those products wholesale, and then the uh, producers that produce Honest products are squeezing them on the costs, right? And then because there's so much competition in this space, I mean, the retailers cannot, price those products much higher than Procter and Gamble or the competitors, even though those products might be, better, more organic, and all that. And then also when people are facing inflation pressures, and then they have to pay so much at the gas pump, they're going to be more inclined to buy the cheap brand, the Walmart brand, or not the branded product. So it's not a great situation. I'm not saying that the company is going to go out of business. I mean, it will go out of business if it never generates a profit. But it starts off with you have to be able to have decent margins so that after the gross margin, you still are able to cover your general and administrative, your marketing, your research and development, and all that. That comes after the gross profit. But if your gross profit is 30%, that's very difficult to to achieve profitability. And Procter and Gamble has a 50% gross profit margin, and then they're able to have a decent bottom line. So in order for Honest to be able to improve margins, they would have to have better production facilities, create their own production facilities, or somehow have a bargaining power to get the costs lower. Well, they're not very big like Procter and Gamble, so it's hard to have a bargaining power with your manufacturing partners. And if you want to make your own manufacturing facilities, well, that is very capital intensive. Like, who's going to finance this? Like, the stock is crashing, who's going to finance it? Any sort of financing would be extremely dilutive. So they're in a difficult situation because the stock was, priced for crazy valuation, and now you see growth not being there. You see gross margin compressing. They're losing money. They still have money in the bank, so it will last them for some time. But the situation is not that great, and and so and then if we go into recession and the inflationary pressures, that makes it very, very tough. I wouldn't, as I said before, I wouldn't touch this company because it doesn't have anything special. The product is not the product is differentiated because it has organic, ingredients, but the consumers are not going to pay for that organic premium. So that becomes a liability for the company. They would have to, like, make those ingredients worse. Well, but then you lose your core customers. So it's a difficult situation. So anyway, these are my thoughts on this company, and I will keep watching it just because some of you guys want me to talk about it. But no, I would never touch it. I don't care if it's at $3, $2, $1, $10, $20. It's just not the type of company that it would ever make me be interested in it.